Hi, I'm Roger Montgomery and welcome to Montgomery Investment Management. Today I want to give you a story, an important one, to help your investors understand the importance of patience and the right attitude. Now, volatility is the enemy of an investor, but not because it coincides with declining share prices. In fact, falling share prices you should see as an opportunity rather than a risk. But what volatility does is threaten the sense of security that investors feel. And this makes it difficult for longer-term value investors to simply stick to the plan. When a plethora of bad news bombards you, seeing the wood for the trees is always going to be difficult. But I think a little perspective is all that you need to help direct your attitude and your client's attitude to the benefits of buying businesses whose net value or net worth rises year after year. Consider the US IPO of Coca-Cola back in 1919 at $40 a share. Just 1 year later, the stock was trading at $19.50, and that was the result of rising sugar prices and a perpetual contract Coca-Cola had with its bottlers to supply the syrup for a fixed price of $1 per gallon. What would have happened if your grandparents or great-grandparents purchased a single share in 1919 at that $40 and held on through the subsequent decline to $19.50 in 1920? And then on through the Great Crash of 1929, the subsequent depression of the 1930s, World War II, a baby boom, dozens of other wars and skirmishes, an oil crisis, assassinations, the fall of the Berlin Wall. You're starting to get the message. And what about the recessions, the booms and busts, the scandals, the war in Vietnam, 2 in Iraq, and the global financial crisis? If they had simply kept that single share in the family and reinvested all of the dividends, then by January 8, 2010, you would have had 126,000 odd shares with a market value of about $6.9 million. Now that's what I wrote in my book Valuable, which I published in 2010. Since then, however, dividends have kept on coming. In fact, there's been another 14. And in August 2012, there was a 2-for-1 split as well. This week, after 14 dividends and the 2-for-1 split, and since the 8th of January 2010 when I wrote my book, the value of those Coca-Cola shares have risen from $6.9 million to $11.7 million. The point is that since 2010 when I wrote my book, there's also been plenty to frighten investors. There's been the tapering of quantitative easing, fears of inflation, deflation, and even reflation. More recently, we've seen or witnessed the Russian incursions into Ukraine, uprisings in Europe and in Egypt, a shadow banking crisis in China, property collapses in China, and the threatened annexation by China of disputed territories claimed by Japan, Vietnam, and the Philippines. It's enough to see investors put their cash under the mattress and run for cover. And yet, despite this, sound companies like Coca-Cola with powerful competitive advantages keep growing their net worth and throwing off rising levels of income, which is exactly what your investors want. When explaining to your clients how we invest at Montgomery, I hope that this story about Coca-Cola gives your clients a sense of calm, a calm that inspires confidence in you and confidence in Montgomery. I look forward to seeing you next time, and we look forward to working for you and your clients.